Welcome back to another edition of Forex Tech Magazine. It is your host, Lewis, and today is, wow, January 21st, 2018. We're moving right on along here, and, oops, hold on a second, got some audio issues. Alrighty then, I think we should be okay. One second, some audio that's out of place. I just need to find out where it's at. Um, where are we? Let's see here. Testing. 1, 2, 3. All right, I think I got it. Cool. All right. Anyway, wow. Welcome back, guys. Hope everybody's doing well. Welcome all our new followers. I really appreciate all the love. Really appreciate all you guys following me. That means a lot to me. Hopefully, we'll get some more going in here in 2019. But what I want to do here, if you haven't made any money so far in 2019, please hang tight with us. Hopefully, with some of the, tidbits and uh, tips and pros and topics today that you'll be able to make some, better turn your 2019 around into 2019 winter. Before we get into that, though, I want to go ahead and get to the disclaimer. Disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Any and all information is shared with you that from Forex Tech Magazine should definitely be only considered for entertainment and educational purposes only. If you are seeking or in need of financial advice, our suggestion to you would be to consult with or to seek the assistance of a licensed, competent financial advisor. Now that we got that out of the way, let's go ahead and get into why you came here in the first place. And I do apologize, that was a little discombobulated. I am trying to do several things and look at several things at once. But let's go ahead and get into this. Let's look at some trades. And not this particular trade because we're not trading this currency pair, but this right here is the Euro CAD and we're not trading that. But let's look at the right above it, which is the Great Britain Pound, New Zealand Dollar. Let's see what's going on here. All right, this right here is, of course, is off of the hourly chart. And if you notice here, going horizontally across the screen, here's our support and resistance lines. And then diagonally is going to be our counter trend lines. And then, of course, we have our Fibonacci sequence as it's playing out here on the screen. These are previous Fibonacci's that have hit, and then we just kind of left them out there. And the reason why we leave them out there is because we initiated these Fibonacci sequence with the Smart Trader tool, right? And so what happens is once we hit that, we find that swing low on the chart, the trend lines automatically populate for us. And what happens after they hit their D extensions, it automatically repopulates or generates the next sequence of Fibonacci's numbers for this particular currency pair. So it can just go on and on without you ever having to go back in and redo anything, as long as that trend maintains in place, right? But anyway, so let's look at this right here. Looks like this right here was the break back. This right here was the Fibonacci sequence. It hit here. Looks like price came down here. Counter trend line buy. Price broke up. Price hit the fib sequence there. So now we're in a position where This is our A, this is our B, this is our C here. All right, C is right here at a support or resistance line. Looks like price has pushed through it and it's come back. And now it's at potential to bounce up. So, but it's going to have to go through two different support resistance lines. So it may give it a little bit of a fit on its way back up. And so this is positive Great Britain pound. And we noticed some information came out over the weekend about something that's supposed to be happening in Parliament, I think, today for the pound. So this may actually prove to be worthwhile trading. Let's look at something here before we trade, though. Look at risk reward ratio. Note, that I like to put my stop loss below the A. That's 284 pips. That's a lot. It's 416 pips. That's even more. So this one right here is not a bad risk reward ratio. What you have to kind of really determine with this one right here, though, would be whether or not you have the funds in your account to sustain such a large drawdown, right? Because if you're looking here, this right here is our C. All right, if we're going to determine this is our C, we're going to put our stop loss here below the A, just saying that, hey, if price goes below the A, we're going to get out because we know that the price is no longer making those Fibonacci sequence. And if we place it here, it's about 284 pips that we're risking. But on the upside, as long as price, bounces up from here, right, red to red, looks like it's 416 pips that we could potentially gain. So it's almost like a 2-to-1 reward to risk ratio, which that's what you want. That's what you want. You want to be in those type of trades. So won't use a whole lot of leverage in this one right here. Probably just use it at a regular standard lot. So we're making like what, $10 a pip, 400 pips. That's $4,000. So that right there has good potential. What we want to do is make sure, though, if we get into it, we get into it at the right time. It's crossed over to the buy side. He said, well, how do you know it's crossed over to the buy side? And the reason why I know it's crossed over to the buy side is because actually now it may not be, because let's look at this. Oh, it is. So it's crossed over to the buy side. So you see this right here is the downward trend. This right here is when, after initial push up, price takes a pullback, and now price is crossing back over to the buy side, right? Everything on this side of the trend line is basically saying it's going down, because basically what happens is it hits this trend line and it bounces off and goes down, hits this trend line, bounces off and goes down. But what's happened is, because we're right here at this support resistance line, price actually bounces up and goes through that trend line, places on the buy side, and then it comes back to retest the trend line. So actually right now is probably the perfect time to get into this particular trade. But you have to really be careful because these Great Britain pound pairs are pretty crazy right now. But there's a potential, like I said before, to make some money on this one. Just kind of looking at this thing overall, where it's going. And I know it looks kind of jumbled up. Sometimes you just got to take all the fibs off the chart and just kind of look at it naked and see. And what I'm looking for and what I'm looking at is just where the extension is going out to. Like, where is it taking me to? So it's going a little bit past that resistance that was up here. So that's a pretty interesting one. So that might be one that we want to go back and trade. So what we're going to do is hang tight on this one. We're going to look at some other ones. And essentially what we're doing is we're going to look and see what offers us the, the best trading opportunity, right? That's what we're looking for. What is a better trade opportunity? What is lower risk and higher reward trading opportunities? Now this one here is setting up for the same thing, looks like. Here goes our AB boundaries. Here's price pulling back. It looks like this one right here, price is pulled back into the blue, possibly green. And I'll tell you what, I got some other, I'm gonna have to clear that out. Let's see. It's 240. So I like that right there. Risking 750 pips to get 240 pips. To me, that right there makes a lot more sense than going the other way. And the reason being, I'm gonna have to get rid of this because and the reason being that makes sense to me is because if you're trading a standard lot, I mean it's 2,000 some dollars that you have an opportunity to get, and you're only risking um, 75 to get it. Oh, so let me see something here. I mean, you're only risking 750 to get it. Sorry, guys. I'm distracted. Okay, this one. Alright, well, that makes sense. Alright, it hit. Price comes down. Green. That makes sense. So what was I just looking at? What was that one? Okay, I see. Alright, so this is what happens. That makes sense. Okay. So essentially, these are two different Fibonacci patterns that were plotted out on here. Okay. So the first, okay, so this one right here was one that's like I did it with Smart Fibs, right? From here to here, we had the pullback, which was still in the red. It didn't touch the blue. So the price target was here. It hit the price target. Boom. That created the new A, or the new, B. Here goes the A, which was a C. A to B. Boom. And then our, this right here looks like it's bouncing off of the red. So our new price target is going to be here. Let's see here. So that was 458. 247. This matches up better with what I was looking at before. Okay, because I was wondering about that. Like, what in the world is it? Let's see. This one right here is just me drawing it off of this fib here, or this pullback here. All right, this is the A, this is the B, this was the C, this was our D extension here, right? Which then changes right to the A, changes to the B, this right to the C, right? And that'll bring us out to about here. So this is one of those ones. That could be kind of tricky to trade. Stay out of it for right now until I go back and look at it, analyze it a little bit more. Either way it go, regardless of how I overall decide to trade it, I think that I would be, or I know I'd be more conservative. It lines up better with what's going on with the Great Britain Pound, New Zealand dollar, which was the it's about 200 pips of risk, 400 pips of gain. So I would be looking more towards that scenario here versus the one that I was looking at earlier, which is 200 pips of gain versus 75 pips of risk. Just because, these things have a certain type of flow or continuity to it that allows for it to, how can I say? Excuse me. That if it's moving in a certain direction, all the pairs are going to kind of move in that same direction, start trying to make those same patterns, and that's kind of what's happening right now. Everything in the Great Britain Pound is kind of like lining up and kind of pushing, formatting in a certain type of pattern. So just got to kind of be aware of that, right? When you trade these pairs, and if something kind of looks off, don't mess with it. You don't have to force a trade. And what you want to do is you want to try to trade the easiest trade as possible. A lot of times people go in here and they look at something that looks really complex, and they say, well, let me trade this one right here, because they want to try to prove how smart they are. And listen, you don't have to do that, man. Just find the simplest setup that is, the easiest one to trade, and that's the one you want to get into. So let's look at this Great Britain Pound, Japanese Yen one here, and let's see if we see some opportunities for this particular pair. Okay, so this right here was that was the initial push down. Price came back up. Here goes the trend lines, moving down, broke across the trend lines, broke across the support resistance. Price is now in the process of pushing up. Did it ever fulfill that last Fibonacci sequence? And it looks like it did. Here. Let me check something here real quick. Let's see here, man. Let's use our smart tool and see what we got here. Okay. Boom. You see that? How fast we were able to put the fibs on the chart. What I had done prior to that, those were manually drawn on the chart, and so that's the reason why the software didn't automatically go in there and update it. But what I did is I went in and I just used the smart tools, when I used the Fibonacci tool, and just found the swing low on the chart, and then automatically just went in and populated everything for us, which is what we want, right? And you can see off the first fib sequence, here goes our A, here goes our B, this is our C, this is our D extension, because we're looking at colors here, right? Red to red, blue to blue, green to green, right? It only went back to the red, so then it pulls back up. That makes sense that our target is going to be in the red, and our target was hit over here. All right, goes up to the next swing high, right? Creates our A where the C was at, B where our D extension was at. Then we look for our C, which is going to be our lowest point, right? Our lowest pullback, right? Which would be right up in Oops, right up in here, right? And then our D extension, because it was still in the red, was up here. Boom. Goes all the way up to our D extension, hits, price pulls back, our C then becomes our A, our D becomes our B. And now what we're doing is in the process of watching price pull back, and we're trying to find our C before we determine what our D extension is going to be. The good thing about this particular pair here is crossed over the horizontal support resistance, and it's also broken above our downward trend line. So of course these are all buy signals for us, right? But what we're going to want to wait and do is we're going to wait until price crosses over this downward trend line here, right? Matter of fact, let's do this. Yeah, we're gonna wait for price to cross over that. All right, wait for price to cross over before we get into looking to buy, because right now everything below this trend line is basically signaling sell. Now let's just kind of look at something here. Just kind of seeing where we're at right now in the market. So it's 430 pips away, and it's about 360 pips away from the A. So you kind of see how these things are kind of like lining up. I mean, there's a consistency with all these pairs, which tends to be that the consistency seems to be that there is a 200 pip, a 400 pip reward, and somewhere between 200 to 300 pip risk on play for these particular pairs right now. So once again, you got to kind of look at your own account balance and determine whether or not you have enough money that if this thing was to pull all the way back down to the green or in the blue or somewhere in between, would you have enough money to be able to still stay in that trade without getting a margin call, right? Or even if it hits, let's say it goes back and hits your stop loss, right? It goes below the A, right? And then you find out, well, price is trending in the opposite direction now. Would you have enough cash in your account to allow you to still be able to trade, like you're trading right now? Will you still be able to trade a standard lot? Will you still be able to, continue to trade? If you can't, and that's not you, then that might not be what you want to try to do. You might either want to try to do like a mini or micro lot trade on this particular pair, or you may just want to stay out of it altogether. You may want to wait until you get some better conditions in here that that allow you to be able to trade with a lot less risk and still be able to get an ample amount of reward out of this pair. Okay. Just remember, you don't have to. Some of the best trades that you ever make is going to be the ones where you just kind of like sit on the sidelines and just avoid getting into it altogether. Period. Here goes another one. Let's look at this one. I'll go through the whole sequence of events. What I am going to do is I'm going to go and look and see. Where are we at? This definitely reminds me of the one we were just looking at. Let's see here. Yeah. So what I'm finding, what I'm looking at here right now, what it's telling me is that we're still looking for the C, right? Price hasn't crossed over to the buying opportunity. So I got to tell you, for most of the pairs right here today, looks like so far, is that it's not going to be a buying opportunity to get into these pairs. Maybe it's one or two that you can look at maybe getting into. Even those, like this one here, I think we said we could get into it, but now that I'm thinking about it, I'm looking at this. I mean, yeah, it's on the buy side, right? But it's still going down. What I may want to do is I may want to wait, put in another counter trend line, right, and wait for it to break that counter trend line before we get into this pair. Just because I'm looking at the overall movement of this currency pair, and it looks like overall everything's kind of moving down. So may want to wait another 24 before I get into these pairs, another 24.48, just to see what price is going to do. I do believe price is going to potentially go up, but I just want to make sure I get that buy-in signal, get that okay from the market to tell me to go ahead and get in. Because if I just get into the market on my own, anticipating U-turn, anticipating that price is going to push back up. What's going to happen is price will probably continue down, and then all of a sudden now I'm going to be caught up in this drawdown where I'm going to either hit my stop loss or if I'm over leveraging my account, potentially get that margin call. So either one of those are not good. I don't like drawdowns. I don't like sitting there and looking at my account balance fluctuate in the negative realm. Me personally, what I like to do is I like to get bored while I'm looking at my price fluctuate in the positive realm. That's just me personally. I know everyone is different, but that's just me. It helps me sleep better at night. But this particular pair right here definitely would stay out of it for right now. Don't see a cause to get into it because I think that it's going to. I think it has a little bit more of a. Let's see, smart fibs. Boom, boom, boom. Yeah, it still has a little bit more ways to. Has a little bit more progress it has to go through before it starts pushing up. And I think probably part of it is just because, like I said, that information came out over the weekend about some moves that's going to be happening in Parliament here this week, today, shortly. May have the market kind of spooked. And so what they may want to do is, what traders may want to do is still on that back side of things, right? Boom, boom, boom. So it could bounce up and continue to sell off, or it could bounce through and push up. I think what it's going to do, I think it just has traders kind of spooked right now as far as what's going to happen next with the market. And I think right now the best thing to do is just kind of like let the market just let it play out. Remember, we're looking for setups, and we're not trying to anticipate what the market's going to do. We're not trying to guess where the market's going to go. We're looking for setups that give us a high probability to let us know where the market's going to go next. Okay? So this one here is sit on the sidelines. Let's look at the Great Britain Pound US dollar. Oh, it's looking exactly the same way as these other ones are right now, right? Crazy thing about this one though, it hasn't even completed its fib extension, right? Because it's supposed to extend all the way out to the D, and now it's came close, right? But now it's fell back. So yeah, word of caution, just sit on the sidelines. If you trade the Great Britain Pound right now, sit on the sidelines, at least for the day. Maybe within the next 24, 48 might be something I want to come back into and kind of look at then. But right now, nah, ain't worth it. Not worth it. Let's look at our alternate pairs. Let's see here. And alternate pairs is ones that we're looking at trading on our live account. We're using a really small amount. I think we started out with 360 or something like that. Had one bad trade, good. But now we're in the business of getting that one back. But we were using Great Britain Pound. We're using the Australian dollar and the Canadian dollar to trade. So let's look at these. We haven't traded with the Canadian dollar as of yet, but we're looking at some potential setups here. And I don't like this setup at all. I think it's right here is this. It had a really good Fibonacci sequence with some downward momentum going down for a while. And if you notice right now, it looks like it started moving sideways and even kind of pulling up for a little bit. Right? This was the downward trend line. It crossed over to the buy zone. But it's still kind of going down on the buy zone. This right here is the upward trend line. It crossed through that. So it's kind of a muddled mess right now. Essentially what it's doing is just moving sideways. So for this particular pair here, if you were to trade it, I'd just be looking at, these little support and resistance areas in here. There's not much room. I don't think there's much room to trade in this zone here. I think it's pretty tight. Yeah, we're talking about maybe 50, 60 pips. That's pretty tight. Some people might want to trade that. I don't know. But me personally, it's not anything I really want to get into. But if you do trade this right here, I would probably be and it's muddled. I don't know. It doesn't look good to trade. Because I can't even say if you want to trade going to the downside or trade going to the upside, just because it's a muddled mess. Typically, price 70% of the time, once it goes into consolidation, it's gonna continue on the path that it initially was going before it consolidated. And if that's the case, then that means this thing's gonna continue to go down. It wouldn't make sense potentially around this time of the year, just because the Canadian loon is linked with the price of oil, and even though it's not skyrocket right now, gearing up for the spring with all the stuff we got over in the Middle East. Uh, it could see a turnaround in increase in the price of oil, and if that's the case, then you may start to see this right here push back down farther. But for right now, this right here would be one that I would sit out, just because it doesn't really look like anything. And the problem is when you go out here and you start trying to see something where there's nothing to be seen, you wind up losing money, and you get stuck in these trades, and it's no good. It's no bueno, right? It's no good. The next one we're going to look at here would be the Australian dollar, US dollar pair. And it's another one where it's just really been trading lousy lately. It's just been going sideways for me. All right, hate it. And it actually did something here that's haven't seen in a while. This probably happens more often than not, and I'm pretty sure some of you guys out there could probably tell me, like, oh yeah, this happens all the time. But not for me. Sorry guys, try to get this thing back to the right size. Do that. Do that. The heck just happened to my screen? Oh my goodness. Let's see here. There we go. Let's see. There we go. All right, cool. So anyway, what happened was had a Gartley, multiple Gartley patterns. They had a Gartley pattern here, right? So this right here was our original AB move, right? Well, let's look at the original one. So this is the original A. This is the B. C had shallow C. The D extension was here. Boom. This is the next swing high. So our C became our A. Our extension became our B. And so then we were looking for our C. We thought initially that the C was here, right? It's going to be a real shallow C. So we got in. That means that our extension was here. This D extension here, this red one, and I even highlighted with a green line here. Of course, we came close to it a couple times, but never actually hit it. So then what I did, I said, well, sometimes I know that the market does what they call Gartleys, right? Whereas you have your D extension, but before you hit your D extension, the price is going to make a Fibonacci sequence in the opposite direction of the overall trend, right? So I said, okay, let's see if that's what's going on. So I used my smart tools, came in, placed it, and sure enough, what was happening? We did form that pattern, right? Where here's the Fibonacci sequence, right? Our A, our B, pushed up to our C, and then let's see if we get this a little bit closer here. Our A, our B, get pushed up into it, and it went all the way up into our blue, right? So blue to blue, boom, it completed it, right? But then it went and did another one, right? And I said, well, could it possibly, one, yes, two, maybe, right? Did another one, the second one, price pushed all the way back up into the green. Boom, completed again. So now I created a third one, and I'm like, is it really, completing a third one, right? I personally think that was probably the last one, right? I think it gave me two. I don't know that it's going to be three. If three, this is kind of scary, because then you start thinking, well, maybe this price is just trying to reverse altogether. But I think that what's happening is just that it's a unique situation where price created these two Gartley patterns here, and it's in the process of potentially completing this Fibonacci reversal, because here's the thing, even with these two Gartley patterns, right, price has not dropped below even our first Fibonacci retracement, which was at the I think it was 0.236. So it hasn't even dropped below that. So everything stayed up top. So that gives me a good sense as far as the staying power for this particular pair. But you know, there's always that off chance that something's going to happen that you don't anticipate and push price lower. So we're going to see how this goes over the next really probably 48, 72 hours here. If not, stop losses in place, and we got our take profit up here. So we'll see. But at any rate, guys, listen. I'm about to get out of here. This is kind of a quick and dirty look at the markets right now. Like I said, the Great Britain pound pairs, the only one that looked really decent or looked really potentially good at the moment was the Great Britain pound New Zealand dollar. But then after looking at that, I would still want to wait until you get another additional counter trend line break. Let's say here. Oh, yeah, still want to wait till you get a counter trend line break here. So that means price would have to cross over this counter trend line. I mean, it's in a perfect position to be able to do so because it's bouncing off of this support area here, right? But before we get into this particular pair, we'd like to see that happen, and then, you know, potentially it could push on up to that D extension. But also remember, it has to go through some resistance levels to be able to get to that promised land. So but on a whole right now, I mean, all these Great Britain pound pairs, they all look the same to me, which is they're kind of searching for where the C is going to actually be, right? Nothing's broken. Nothing is on the buy side as of yet. So I would, like I said, continue to stay out until price gets over that buy side, and then once price gets on that buy side, that's when you can connect and get in there and start making some cash. But until that, I wouldn't do it. It's just too risky because price could continue to go down, and if price continues to go down, then your account value is going to pretty much do the same thing unless you shorten it. And, you know, based off of what we're looking at here, this is not it's not the time to short just yet. If we cross below the A, then we can potentially look at shorting. But right now, the way the market is positioned to buy. So I'd be looking for buying opportunities, at least off of the hour chart. Now, if you can go into like a 2-hour chart, a 4-hour chart, or something like that, and you see something different, right? You see different patterns forming. By all means, you can trade it, right? But looking off the hourly chart right now, hourly chart is just telling me to kind of sit tight, stay on the sidelines for this particular pair, wait for a couple more hours or so, wait another, 24 to 48 hours, 1 to 2 days, see how this thing plays out before we get in there and start taking a position in this particular market. All right. Anyway, guys, if you got any questions, feel free to hit me up at questions@forextechmagazine.com, or you can shoot me an email at forextechmagazine@gmail.com. Sorry, I'm trying to remember these email addresses and stuff. Anyway, hope you guys got something out of it today. Tune back in tomorrow. I'll be back in here in another 24. God bless you. Hope you have a good rest of your day, and hope you make a ton of money. Take care. Bye.